this moving. Okay, so the first one we want to look at is VXX. I should say IBM. Hold on. Oh, that's right. Yeah, VXX, since we got that screen up, what we're looking at here is the it tests out well on the auto framer at almost 4-to-1. And the reason being is the test of the 10-day high. If we went back 1, 2, 5, 6, 7, 8, 9, 10, that would be a test of about 33.60. And using yesterday's low, that's the move in the VIX that tests out well on the auto framer. But you'll notice it doesn't show up on the regression line fractal simply because the RL10 and the RL270 are basically co-located, so there's no real advantage. That just says the VIX is properly priced. The short-term trend and the long-term trend. All right, so we'll take a look at IBM now. And IBM tested out on the auto framer as well. And again, you'll see the what I like about IBM is that the 270 regression line is still facing up. This last little pullback here that we've had from 197 to 181 has made the 270 period regression line slow its upward movement. You can see it was steeply up here, now has started to cool off a bit, and price has come all the way back to the 270. This, in fact, is the argument for why you should pay attention, or why we should pay attention to the regression line ratio, if you will. I want to show you some. If we move this back just a little bit. So there was a time back here at the early February when the 10 period regression line and the 270 were both in sync. And you see the 270 was sloping down. That means IBM had made a nice pullback from a previous high. And then we get this nice move. We get an RLCO underneath the 270, and then up it goes from this price level of 173 all the way up to eventually 200. That's the size of the excursion the last time the 10 and the 270 were together. And in that time, it's gone from 175-ish to 200, and then back down now to 180. And now the 10-period regression line, which is in the blue, has now rejoined the 270. And you'll notice that the 270 in this period has gone from sloping downward. The 270 is that pink line. It's gone from down to the region where it was flat, and then it crossed its own little Bollinger Band here, and now has been generally up. So the longer-term trend is up because of the power of this move from 175 and even with the pullback. And so the point to make here is that there was a time up here, this was the maximum excursion of the 10 period regression line from the 270, and that was the size of the opportunity. And then what we've had since then, we would have said that 178 was the target on the downside once this starts retracing. And now it's come down all the way back to 183, getting most of that move. Well, now it's now been stabilizing here at 183, at 182. And so that's the area that we want to look at. So when we look at this in terms of the auto framer and we go back to a 10-day high, you're really talking about a return to 180. And so you have a small risk and at least 2 to 1, and that's why IBM sets up nicely on the auto framer. What I like about it is that the regression line is still sloping up. It's above its ribbon. It has made a nice measured move from 175 to 200. It's stabilized here, a nice double bottom at around 182. We have a critical state. If it fails, you can see that it's going to come back and test 175. So there's still about 8 points, $8 on the downside, and then the move up to 188 offers about $6 just to get there. Now, if it we can then say if it does hold support here at 182, how far is the next move? Well, a move right all the way back to 198 and retesting the previous high would not be wrong. And if we just took a look, what was the maximum excursion from the 270? We could say it went this far, which was 177 to 200, roughly. So a 23-point move. So a 23-point move from 183 would put it up around 206. So longer term, if we get this kind of move here, 1, 2, 3, then 206 is the upside target for IBM. So that's a way that we can use this regression line fractal framework to start estimating some reasonable moves. In the meantime, our auto framer, just using the 10-day high and 1 day of range risk, has identified a nice opportunity in IBM, which is simply it holds support at 181, and then our 10-day target's about 188. Or in other words, if you take a look at the at this green line, that's the 270 regression line. So that is actually the nice next target to the upside around 188. So if you can manage $1 or $2 in IBM, that gives you about a 3 to 1 upside move in here. And then if it gets through 188, we would expect these price levels to be tested. So we have some nice moves available in IBM. Let's take a look. Walmart was also on the auto framer, so let's take a look at that one. So if we presume a support about 75, you can see the 10-day highs at 77.5, and we have a nice 1 day of momentum at 75. So this is about $2 to the upside. If you can manage $1 on the downside, then you have a nice 2 to 1 on a retest here. Now let's take a look using the fractal format, or the fractal framework, and see what we can see. The last best excursion to the downside was back here in February, when it went from 73 to 78. That was about a $5 excursion, and it came back and tested here, And in fact, it came all the way back and reached that price here in the move from here to here, completing the square, if you will. And this nice little confirmation here when price crossed the 90, and then the 90 reverses and crosses up, and at the peak of that moment, the 90 just went positive. Now you'll also notice that Walmart, the 270 was down, then went sideways, and now is above its little ribbon. So this is still very favorable. And what we have is a double bottom that was higher than the previous swing low. So now what we can see a lazy W forming, where we have we have this move up, down, and up. And so if it can move from 73 to 80, that's about a 10% move, or a $7 move. If we can get a $7 move off of this one at 75, then that should take it to 82 on the next leg up. In the meantime, what we would be willing to take this trade in steps. If we're really going to have support at 75. Well, first of all, if support at 75 fails, you can see that the next price target on Walmart is down here at 73. So there's $2 of downside opportunity. And so the first move is back to 77, or the 270, then 77.70 at the 90, and then the next swing high at 79, and then 82. If we get the same size move from here, we'll get 82. So those are the upside targets. And then I would tell you, if 73 fails in Walmart, then there's a lot more on the downside. So we have a nice critical state formed right here with an opportunity to gain. Okay, so that's Walmart. Okay, so that's using the fractal framework to look at the symbols that tested out on the auto framer. Now we're going to take a look at symbols. Let's see here. So the next two sets of symbols, the first one's Visa, Pfizer, Bank of America, Nike, and United Tech. These were the ones that were below their where RL10 was well below the RL70, and so the move up is what was the reward to risk ratio. So let's take a look at Visa. So this is not surprising here. We have the RL10 and testing a move to the RL270. It's already put in some rising lows. The 90 has gone from straight down to sideways, and the last impulse was up. So what we really need to see now is finding support at 210, and then we'd look at a move to 220. A failure here, though, this is a nice critical state. A failure here takes it back to 200. So we have a nice critical state being framed in Visa. So Visa was about 6.4 to 1 reward to risk ratio. Oops. All right, let's try to get, hold on here. Sorry about that. So next up is Pfizer, which is about a 5.5 to 1. I wonder if you can hear that thunder in the background. Pretty amazing. Okay, so now we have the regression line 10 is right at 29.78, and the 270 is right around 31.50. And what I like is that we've got a nice rising lows here, and we had an RLCO twice, and the 90 has started to turn. So this gives us a 5.5 to 1 reward to risk ratio on a resumption of this move here. That's 5.5 to 1. And this last little move down is the reason to believe in the possibility of that kind of a move. It went from 30 to 32 in a matter of about 3 days. So that's the kind of move that we would be framing. Okay. Next up is Bank of America. Oh, I'm sorry, Boeing, excuse me. So again, we have the RL10 here and the RL270. That's what sets up the nice ratio. Price is trying to find support here about 132. If it can hold, then certainly you can see that the move back up is still feasible. You can see the 90 has already turned. The 30 and the 10 have both been up. We've got a series of higher lows. So it would be normal for it to find support here and then get a nice move back to 140. So that's a frameable trade. But again, failure there, you can see how that sets up a stair step of support to the downside. And we can draw those price targets on the downside just as easily as on the upside. And then failure below 123 is lookout below in Pfizer, or in Boeing, excuse me. Okay, next one up is Nike. Even better. You can see the maximum excursion happened down here. And the reason, again, to be interested in these is when this would have been a high priority on that little regression line fractal framework, and it captures a majority of that move already with 4 higher lows. And now here's a 5th higher low. And now we'd like to see this move. The only downside on this one is that we've had a descending highs here. So all that really tells me is that the downside trade is also valid. So if we see failure below 74.40, then the target is 71, which is about $4. And then if you could manage a $2 stop, you'd have a 2 to 1. So I really like Nike as a trade frame here. You have it's in a critical state. You can see that there's a favorable reward to risk ratio to the upside and to the downside, and then all you got to do is figure out which way it's going to break. You could say, let me see, buy it at 76.40 with a $2 stop, or sell it at 74.40 with a $2 stop, and you have a favorable reward to risk ratio in either direction. Perfect example of a critical state. Next up is United Technologies, UTX. And we should probably see the same thing. Yep. This one is a little easier to see. Now you have, and easier to believe in. You've got this 270 has just been chugging north the whole time. And now what you have was a low, a higher low, and it's already made the turn. And now we're looking at a move back up to 121. And so that makes UTX an attractive candidate. This one shows 2.74 to 1. So this is about 2.7 to 1 in terms of reward to risk if you're using a single ATR as the estimator. Okay. Okay, so now we're going to take a look at the next 5 on these on the stack from the Dow, and these are just the ones in the Dow. You get some really nice frames. So we're going to take a look at CVX now. Now the nice thing on CVX, as you can see from Friday, these 2 little green dots, this is a handy little feature in free stock charts. I have it set for makes a 10-day. If it makes a 10-day high and a 2-day high, then those little green dots fire. So things like corn, Chevron, agriculture, Caterpillar, Silver, American Express, all those made 2-day and 10-day highs. So when we're looking over here at, let me change the screen just a little bit. Okay, so Chevron is a 9 to 1. There we go. Chevron is 9 to 1. Reward to risk, and it's in parentheses, and what that tells you is 9 to 1, 9.31 says this move of the 10-period regression line at 132. Oops, at 132. This is 9.31 ATR above the 270. That's how far that excursion has gone. And this one shows a nice reason to be interested in this fractal framework. You can see on the downside, it went from 109 to 123 on the last big excursion to the downside. So that was, let's see, 109 to 123 is $14. So this move to the upside, if we take that as at 118 and we go up 14, that should get it to 132, and that's where it is right now. Okay, so that's also $14. So you can see how the fractal quality, the symmetrical quality of these price moves. And now, of course, everything looks easy in Chevron. What we want to be able to do is see both ends of this curve. The reason to be interested in the extremes when they're below, and then being able to project how high above it could go, 14. And you get those kind of moves. That's a $30 move. That's 30% from the end of February. And this would have come to our attention early. Now the key and interesting point is here in the middle, when all those regression lines come together and it decides what's it going to do, come back down or move to the upside. Well, it moved to the upside. And it actually made 2 moves to the upside, 2 legs up. So those that have a zero, the zero difference between the RL10 and the RL270, those are interesting as well. I mean, the train has come back to the station, and now we're interested in seeing, is it going up or is it going down? And we have the ability to estimate these distances based on the last excursion. Notice how it moved up the same distance that it was below, it moved up, and then it made a second leg up. So we're at the end of a second leg of Chevron on the upside, and it's at 9 ATRs above the 270. Can it keep going? It certainly can. No reason to believe it can't. But on the other hand, we also have the ability to say if it retraces, we can see 123, and we can see it coming back to 120, and we know that is a 9 ATR move. So the next thing is, if that's 9 ATRs, if I had reason to believe this was failing, like let's say we got peace in the Middle East and the price of oil were to go down, or something like that, because this is strongly tied to the price of oil, it could move 3 ATR off the top, and I would still have a 2-to-1 move to the downside, just to get back to the 270. Okay, so that's Chevron. Let's take a look at Intel. This is one that we've been trading for a couple weeks. This came to our attention during the last live trading workshop. And we got on this thing when it was making these new highs in here at 27. So that's already a 10% gain. So this move from here to here in Intel we can see is 7.36 ATRs above its 270. So that's, how many ATRs is that? 7 plus ATRs to the upside. Now what you like about this is you can see the acceleration in the 270 leaving its own little Bollinger Band ribbon behind. So again, for those of you that may have just heard this for the first time, what we've done on this chart in that gray ribbon area is we've placed a 30-period Bollinger Band plus or minus 1 on the 270 itself, and that acts like a little noise barrier. It also shows us interesting things, like when price is really in a sideways channel, that ribbon disappears onto the 270. And then when the 270 starts leaving the ribbon behind, you get the feeling of this expanding power to the upside, and you get these kinds of moves in short term. So there's something really powerful about the looking at the 270 as 2 time frames higher than our 10 and our 30, and it gives us some insights into what's going on. So can Intel keep going? It certainly can. If we scroll back, I mean, what's not to love about Intel? What you can see, this breakout here on Intel, this is a daily chart going back over a year. I mean, this is what we saw at the live trading workshop. By the way, I just, yeah, this is just such a good chart. Holy mackerel. Off we go. These are the reasons here to be interested when you get these excursions below the 270 and it comes back to the 270 and then up it goes and then making all-time new highs. You have to pay attention to those key prices. Intel. Enough said. All right, next one is Cisco. And we're just looking at, you know, to put this into a framework, we're just looking at daily charts here. These things actually look, there are some attractive moments intraday when we can turbo these and get into these in a relatively low risk way. So Cisco is at 7.2, right? So Cisco is 7.2, and again that means ATR is 7.2 ATRs above the 270, and you can see that if it gets above 25, you have to buy it. It's just an auto buy. If it fails from here, like fails below this price level, if you want, then the move is back down to the 270. So here was a moment, Here was another moment. Here's where everything came together. And now this was the moment. It is just now leaving, the 270 is just now leaving the river behind. It now just started voting to the upside. That gives you an important insight into the long-term life cycle. I will tell you how I interpret that. I interpret that as all these people, the long-term traders that were negative, that negative 270 trend, that's 2 time frames higher. And now that went sideways, and now it just started to shift to the optimistic side of the curve. So where is the upside in Cisco? Again, you can make the argument for 26.5. And then if it gets above here, that's it's free and clear. So you've had this nice move, this difficult move down. The cup is almost ready to form, and if it gets above 26.80, off it goes. And notice what happens when Cisco breaks out to new highs. You get that first burst when all the resistance disappears. So a nice trading target. So we have a 7 ATR move to the downside back to the 270. But then also if it breaks out above 25.20, off we go to 26.5, and then additional positions up here, and then it's free and clear. All right, next one is Coca-Cola. Beauty. What that says is the fact that it failed to fail here is what shifted the longer term orientation to Coke to the upside. Notice how the river is expanding and the 270 is pulling away from it. Just broke out to a high above 41. And now this move here is 6 ATRs above the 270. Okay, Travelers. This is one that's kind of interesting on both dimensions. This move down to the bottom is 5.8 ATRs. It had a nice efficient move here when everything left the 270. It made a 6 ATR move. Actually, that's more like a 10 ATR move, because you got to remember the 270 was down here at 85. So the ATR in this one is about $1. 10 ATR. But now it looks like it may have cracked a bit here. And now it's 5.8 back to the 270. What that really means is if you were to extend this 270 line out, as long as it stays in that kind of rising triangle, as long as price is up in here according to that timeline, everybody that's long-term still loves this thing. So this is going to be seen as a buy-on dip. That would be normal. And it's not really till it gets below 90 that anybody, and you can see that that's the price level. That's where the positive psychology turns negative. And then if it goes below 85, it's look out below. So there's almost 6 ATRs just down to the support level at 90. And then if it reverses anywhere up in here and goes, you'll be buying strength on a dip in Travelers. So that's how we use that regression line fractal framework. Consider this to be like an auto framer, but on a longer term time frame. much like we use the auto framer, we're using this regression line fractal framework to help us understand what's going on in here. Okay. All right, so we're right at 8 o'clock, so that's about an hour. I'm going to go ahead and stop recording.